This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the PremiereTrade Market Wrap.
This is the Market Wrap on a Tuesday. I'm Jack Lott, and this is the James Dix Financial Network. We do have a breaking story just in. The Federal Open Market Committee has cut its benchmark Fed funds rate by a quarter of 1 percentage point to 4.25% this afternoon. The Fed statement was more downbeat about the outlook for growth. The statement repeated that some inflation risks do remain. It's the third straight meeting with a rate cut after the financial market seized up back in August. In a related development, the Fed trimmed the discount rate by a quarter point to 4.75%. There was one dissent. Boston Fed President Eric Rosengren wanted a larger rate cut. Again, Fed cutting the Fed funds rate 1/4 of a percentage point to 4.25%. China's inflation accelerated at the quickest pace in 11 years, and the trade surplus swelled, underscoring government concern that the world's fastest growing major economy is at risk of overheating. Meantime, reports show that the U.S. economic growth will slow to 1% in the fourth quarter as consumer spending cools and the housing slump enters its third year. The New York Stock Exchange opened a representative office in Beijing to attract more listings from China's rapidly expanding economy. New York Mayor Mike Bloomberg and U.S. Treasury Secretary Henry Paulson were on hand at the opening in Beijing. U.S. and China signed 2 deals to safeguard the quality of food and drugs, ranging from pet food to certain types of antibiotics imported to the U.S. from China. Chain store sales for the week ended December 8th rose 2.3% from the year-ago period. On a week-over-week basis, sales increased 0.2%. ISCS forecast retail sales in December are expected to rise 1.5%. U.S. wholesalers worked down their inventories in October, driving their stocks to the lowest level ever in relation to sales. Wholesalers' sales increased 0.7% in October, while wholesale inventories were unchanged. Washington Mutual said it will close offices, lay off more than 3,000 people, slash its dividend, and set aside up to $1.6 billion for loan losses in the fourth quarter. Fannie Mae and Freddie Mac are changing their criteria for purchasing delinquent home loans. They've guaranteed in order to reduce the number they buy from investors. And AT&T will buy back 400 million shares and raise its dividend 12.7%. In Forex news today, the euro fell against the dollar and the yen as a drop in German investor confidence to the lowest in almost 15 years signaled soaring global credit costs are slowing the outlook for the region's economic growth. The yen dropped to a 1-month low against the U.S. dollar as speculation the Fed will accelerate interest rate cuts to avoid a recession, reduced investor aversion to risk, encouraging purchases of higher-yielding assets funded by loans in Japan. Demand is declining for options that protect against gains in the Swiss franc and Japanese yen, suggesting investors will become more comfortable holding higher-yielding assets financed with loans from Switzerland and Japan. Switzerland's 2.75% interest rate is the lowest among industrialized economies after Japan's 0.5%, making the currency's popular funding sources in nations with higher returns. Scheduled economic reports coming out on Wednesday: trade balance for October, November's import prices, and the federal budget for November. In earnings news, H&R Block said it expects a net loss of $502.3 million. That's $1.55 a share. Texas Instruments said it expects to earn 50 to 54 cents a share from continuing operations in the fourth quarter. Kroger, the largest U.S. supermarket operator, reporting an 18% increase in third quarter profit, saying it expects its results for the year to slightly exceed its prior target. Kroger's net income rose to $253.8 million or 37 cents a share. Some of the earnings out on Wednesday include ADC Telecom, Allied Healthcare, CKE Restaurants, Martech Bioscience, United Retail Group, and Haynes International. Some of the stocks in the news today: Citigroup slashing its off-balance sheet investment funds by more than $15 billion in 2 months through the side deals with junior investors. Paul Corporation says its preliminary first quarter earnings before interest and income taxes rose to $64.7 million from $35 million in the year-ago period. And Cadbury Schweppes raised its confectionery sales and margin guidance for fiscal 2007. Sales momentum was boosted by growth in U.S. gum sales a recovery in the firm's UK chocolate business, and as well as pricing initiatives. And that's the market wrap on this Tuesday. I'm Jack Lott, and this is the James Dix Financial Network.